So good evening, everyone. Thanks a lot for joining on this call. I believe this call will really add more reasons for you to understand gold more deeply. This is Abhishek Mehrotra, Head of Investment Products with HDFC Securities. And today we have Mr. Somasundaram from World Gold Council. I'll give a quick brief about him, and I'll request him to speak a lot because that's what most of you are here for. So Mr. Somasundaram is the CEO and is heading India and the region for World Gold Council. He is there since January 2013. He's based out in Mumbai, and he is leading all the activities across India for gold markets. A quick background of his: Mr. Som has over 35 years of experience across diverse sectors, including FMCG and banking. Prior to joining World Gold Council, Mr. Som was the CEO of Lakshmi Vilas Bank. Prior to that, he was MD of Standard Chartered Capital Markets, and that was stance he was almost 8 years. And then he was with HUL, and he has played various roles in financial management, logistics, M&A in India and UK. He's a qualified chartered and cost accountant, and you guys can see here is him on the screen. Mr. Som, very good evening, sir.
Good evening. Good evening, all of you.
It's a pleasure to have you, sir. And the content of the discussion is clearly states that we are talking about gold and why gold and what's the future about gold. But before coming to that, sir, can you give us brief about what is World Gold Council all about, and what is the purpose of this entity?
Yes, see, World Gold Council is an organization headquartered in London. We are basically a market development organization. We were founded in 1987. Our members are the world's largest miners. There are about over 32 members across 45 countries. And a large part of the organized mining comes from our members. It's a not-for-profit organization. We are based, as I said, headquartered in London with offices in New York, Mumbai, Shanghai and Beijing, and now in Singapore and Dubai of late. We are a very, very small organization. We essentially do a lot of research-based work. We do not buy and sell gold, although in the US, having pioneered the concept of ETF, we are the trustees for the largest ETF in the world, which is the GLD. Otherwise, we are totally not for profit. We work on various policy areas in various things. And our flagship research product is the gold demand trends, which is used by various agencies across the globe. So that's where I will stop. But we do a lot of, I would say, a lot of work depending on the geographies on this. For instance, right now we're working on responsible gold mining. We're working on ESG, on gold. So things like that. So we help the industry in general.
That's great. I didn't expect it so much thing happens behind the gold, what we normally transact and use as more of an ornamental value. So can you take us through the history of gold prices and the way forward? Because this forum, most of the people who have joined over this call are our customers who want to know what is way forward for gold, and nobody else than you can touch upon knowing that you see gold not just as in one perspective, which is which most of us in India feel about as an ornament, but beyond that. So can you please touch a bit?
Sure. See, we all know. First of all, let me give you some very, very quick this thing. Total stocks that have been mined, at least as far as all the recorded history goes, of mined gold in the world. How much do you think that would be? 208,000 tons. It's about $12 trillion. That's the total above ground stocks. Now, we don't know what is below the ground. That has got to be mined. This is the total amount of gold that has been mined. And if you really look at it, the industrial scale mining started only after the 1950s and 60s, correct? So that is why sometimes you feel India had lots of gold, definitely lots of gold, but since industrialization, I mean, the second the World War and all that, the scale has increased. So that is why the large amount of gold has come into the system in recent times, the last 50, 60 years. So, but total is 2,08,000. Now, the gold price, as we all know, gold has held a status of almost a backing of the currency till the gold standard was removed by US. It was 1 ounce. Ounces, as you all know, 31.1. It was $35. Now that was delinked, and since then gold has run up to $2,000. You can see that in the non-gold standard days. Now the price of gold, physical gold, is essentially what we call as the LBMA price. It's coming out of London. There are a couple of banks, couple of refineries. You know, they all get look at the price, and it is now what is used for physical transactions in gold. But when it comes to the real, how does this get really fixed? You'll have to also look at what happens with the futures market, which is the driving force for setting up the prices. All right. So, and every part of the world links itself to the LBMA price, which is the London Bullion Market Association price, which is how it has now started working. So you may still see in India, LBMA price of $2,000 converted at 80 rupees plus 18.5% duty comes to, let us take, for a gram of gold, 6,400 rupees. You will still see that the local market is at 6,300, which is why we say the market is at a discount, because there's no taker for it. Whatever. Sometimes 6,400 rupees per gram goes at 6,600 rupees when we say market is at a premium. Just to give you a quick this thing, during 80-20 days, the premium was as high as $180 to $200 to an ounce. Okay, it was very, very high. So that is, as per LBMA price, we should be getting it at, let's take 3,000 rupees. We got it at 3,400 rupees. That is the kind of premium it was going at that time. But otherwise, the whole world links itself to the LBMA benchmark price. India is a price taker. India influences the price, but it doesn't bring its consuming power into this the gold market globally. It just takes the price as a passive price taker, which is why the initiatives such as the International Bullion Exchange in Gift City has a lot of significance for the future. I'll stop there. Hello?
Right, sir. So in fact, while I was reading this, the declining interest rates in US also has a positive correlation with gold prices. That's what the market says. Any thoughts around it, sir? And so what you have shared is the history. People here will also want to know what you look forward for gold as an asset class in terms of long-term capital appreciation. So some views on that, sir.
Yes, absolutely. See, there are a couple of things about gold. Clearly, one very key factor in the short-term price determinant for growth is the US interest rates. There is no doubt about it. Because as I told you, the futures market, the COMEX, essentially drives the sentiment on the price and drives the price itself, price fixation. Of course, the physical market could be at a little bit of premium and discount and all that stuff, but largely the price is and the expectations are driven by the futures market. And there, the interest rate of the US interest rate and the strength of the US dollar drive this price. So they are very, very significant factors. But in the long term, medium and long term, they are not the only factors. There are many, many other factors which drive the price of gold. For instance, demand drives the price of gold. In the short run, demand reacts to price. So just because a central bank goes and buys 200 tons, the price doesn't go up, okay, the international price. But what will happen is, if we continue to believe that they are going to keep buying, then affects the sentiment and the futures market and the price. So in the medium term, demand, lots of other factors do determine price. In the short run, the US interest rates and the dollar strength determines the international price. Now coming back to this, has always low interest rates are, gold likes low interest rates, put it like that, because gold is not a coupon yielding instrument, investment. When you buy gold, you'll have to just only live off the capital gains. Therefore, the cost of holding gold, which is linked to the interest rates, is very, very important. Therefore, low interest rates means better gold price, which is what we saw for a long time. But some of these factors, while they are, which means high interest rates is a headwind for gold. Like we have seen in the last 2 years, interest rates have gone up, but so has gold. So the equation doesn't seem to have worked. Now there are questions asked. So therefore, while interest rates have a significant influence on gold, they are not the only factors as we understand now, but they are definitely significant.
Got it. So apart from ornamental value which gold has, and most of the Indians believe on that, what is the industrial usage for gold, and what is the trend out there? Is there any active usage which is growing up?
Absolutely. See, gold is one where there are, gold acts as a, what I would say, consumption when prices come down and investors want to dump the bars, which is where the strength of gold comes from. It has got a dual nature. Jewelry and technology is actually a part of the gold demand, and these consumers don't expect a coupon. They don't expect even a capital gain. It's not like a lady who has bought a jewelry or who has bought a zari sari or something, wakes up every day morning and says, what is the MTM of this product? Now imagine 50% of your consumers in any asset class are consumers who don't care about their return. How nice it would be. That is how gold is protected, because 50% of the consumption of gold is done by consumers who don't look at the MTM. Other 50%, which is the investment gold, they look at the MTM. They want quick, they look at, encashing it when price goes up, things like that. This is the strength of gold. 7% of gold demand is through technology. 7% of gold demand, which is not necessarily only the golden tooth and things like that. It is used in all the entertainment, car entertainment, mobile phones, semiconductors. Now this has remained stable. It's also growing in some sections and not growing in certain others. But it gives a lot of strength to the demand for gold.
Got it, sir. In fact, just to tell our viewers a little bit of history about the gold prices. So from 2002 till 2012, in 10 years, gold has gone up by 6 times. Then there was little consolidation from 2012 to 2018. There was a consolidation of price for Indian market. It was hovering around 30,000. That's for almost 6 years. And then from 2018 till 2023, where we are now, the gold has gone up by 78%. So that's the last 4 years. That's the kind of there it is.
Screen visible now?
Yeah, it is visible to me.
For those who are on this call, I'm not extremely familiar with how to make the other things disappear. But if you can see my screen, this is the price of gold over 1973 in rupees. And actually, when we did a study from 1984, we can even extend it before, the CAGR of gold has been, and this is only till 2020, we had done that study at the time, was 14.3%. It was just 14.3%, but it was higher than inflation. So this is important for us to know that gold has kept pace in inflation, which is why it's a favorite of many of the households. And it is one of the best performing asset classes in recent times, which is known to all of you, actually.
We look forward for a word of advice from your side, as in a lot of investors want to know how much gold one should have, and especially the youngsters who are recently come into financial industry, and does gold make sense to them also, because the Gen Z which we talk about, probably they have a different inclination towards different asset class which are more volatile. But a word of wisdom out there, sir.
Yes. See, one of the studies we have done particularly to India, to say what is the strategic case for gold. And we have even worked back on a particular pension portfolio. What it says is anything between 5 to 15%. In India, it's a little higher because of the risk matrix. Anything between 5 and 15% makes the portfolio very, very strong. Now, when you say strong, what does it mean? It makes the risk-adjusted returns much better. That is proven with, obviously, we have to use the past data and see what would have been the case if gold had been there. And here again, let me just share one screen. If you can see this, can you see this?
Yeah, it's visible.
Yeah, case for gold. Actually, it is. You can see what we said is an average portfolio. What is the return? And look at what happens when you add 2.5%, 5%, 7.5%, and 10%. The risk-adjusted returns are always good, which is not the reasons are not hard to find, because at the end of the day, gold performs a significant role as an investment. While it also has, as I told you, a lot of significance as a jewelry for jewelry and ornamentation. It is definitely used as an investment. So to say that, therefore, 5 to 15 is what we say, depending on the risk matrix, risk of your portfolio, I think will always be a very sensible thing to do.
Definitely, this looks fairly attractive. Yeah. So now coming back to sovereign gold bond, which is issued by government, there are questions which are why should customers should buy a sovereign gold bond rather than a physical gold. What are the key benefits? So if you have some views on that.
Of course, it's one of the best instruments in the world. Let's be very clear. I sometimes wonder why the government is giving such a benefit to the investor community in India. It's a good product, excellent product. I mean, there is at least we can't find an equivalent instrument anywhere which gives you 2.5% return and an upside on gold which is tax exempt. As you all know, the way sovereign gold bond works is it gives you a 2.5% on your original investment. Original investment means not including the 50 rupees discount. What I'm saying is they issue it at a certain value. You add 50 rupees per gram to that. That is the original investment. On that, you get 2.5%. And then they upside on gold at the end of the 7th, 8th year. You can obviously sell it in the secondary market at a discount anytime, but it is fully tax exempt when it comes to it. Imagine what is the return people have made, those who invested in the past. I will take only 2015, which is coming up for maturity in November 2015. Yeah. 27,000, if I remember right, 27 or 26,500, something like that. True. Today he's doing it at 59,000. I can't find a equivalent instrument which will give you such a tax-free benefit. And you have had 2.5% year on year. So I think it is one of the best instruments for people who want to take this thing in gold, an exposure in gold, and at the same time don't want to hold physical gold because you don't pay the taxes and VAT and things like that. You don't have to worry about keeping it the safety and all. I think it is one of the best instruments in my view. Of course, the issue is there is not much liquidity in the secondary market. But for those who can really, see that you can, of course, take a loan and things like that. Your own bank must be giving a lot of loan. But people who normally invest in sovereign gold bond are not the people who want to take a loan. That's also something we have seen. So it's one of the most popular, I would say, and very sensible investment for those who want to take an exposure in gold.
So, apart from the benefits which you told, which you shared, in fact, there's hardly any sleepless night because of gold volatility if you buy a sovereign gold bond. So what are the risks associated with buying a sovereign gold bond, or is there any?
Well, The risk is essentially the gold price. At the end of the day, if today they are issuing it at 5.9, I forget the price of whatever, 5,900. Let's assume for whatever reason, because the rupee has strengthened, all that stuff, it comes down to 55,000. At the end of the year, you will get 55,000. You are running that risk, there is no doubt. But that risk applies to the category, not to this instrument. Even if you're holding physical gold, that's the same risk that you are running. In fact, you will be running a greater risk there because you will never even look at it every day. And then suddenly you will find, oh, I bought it 8 years ago and it hasn't gone. But that's very unlikely scenario.
True.
Gold coming down for all the experts and all that is happening in the world and the kind of money that is floating and the monetary policies, what central banks do. Central banks are about 1,000 tons last year, 1,000 tons. Even during the gold standard, they haven't bought so much gold. 55 years. So given all that, we don't expect gold price to have such a major this thing. So it is therefore an unlikely risk, yet it is a risk. Other than that, it has got sovereign, it is sovereign risk, it is gold, and it is a return yielding instrument, and it is tax-free.
Right. And the gold itself is transferable. So if somebody wants to accumulate and transfer to any one of his family members or way forward, it can be done. So
absolutely, that's a very good point you made. I mean, it's actually, you can gift it to people. In fact, the first sovereign gold bond, if I remember right, when the Prime Minister launched it, somebody gifted it to someone else. If I remember right, I can't figure. It's got all the benefits of gold without, for those who don't want jewelry. And the point is, you let's assume you are even planning for a wedding. 8 years, 10 years. The children are young, and 10 years down the line, you want to buy gold. You can actually keep it in the form of sovereign gold bond, and that money can be used to buy gold at that point in time, so that you get even the modern designs. But what happens otherwise? When you buy in physical form, it is always a different thing. Physical gives you a lot of pleasure. Okay, but when you're buying jewelry, in 8 years, designs might change, and when you go for a exchange, you will lose some money. That issue is not there when you are investing in anticipation of a future purchase when you buy the sovereign gold.
Very rightly said, sir. So what are the tax implications on the interest and the capital gains? I think you touched on capital gains, but on the interest part in sovereign gold.
Interest is taxable. A couple of years ago, when I do hold, I must also say that I do hold the first tranche or something like that. 2.5% is taxable. But then you look at between 2017, 18, 19, and those years, if you recall, the savings account interest was less than 2.5%, if I remember right, in some of the big banks.
True.
And sovereign gold bond was giving you 2.5%. So, and actually it is higher if you take the discount into account, all right, because they give a discount of 50 rupees and all that stuff. So say the interest is taxable according to your tax slab. Capital gain on maturity is not taxable. Capital gain on sale in the interim is taxable, clearly. Right. But for the person who buys in the secondary market, right, holds it till maturity, it is tax-free. Again, this is our interpretation. Each one, I always say, we are not financial experts. Everybody has to consult their tax experts. Let me put that disclaimer straight up front. Still, the understanding is, if you buy in the secondary market and hold it till maturity, the capital gain is still exempt for the secondary market buyer.
Got it, sir. Got it. I think this is very, very informative for all the customers who have logged in. There are one or two questions which are pertaining to fact sheets or a note. So all those clients, please drop a one-liner mail to your respective relationship manager or our customer service desk. We will share you the detailed product note about sovereign gold bond. Probably this forum is just giving you a glimpse of the things, but you will have a detailed note about it. In fact, so the last thing, because I can't see much question because people are anyways convinced of buying gold, but I think the price has also corrected over last 1 month or so. It has peaked a month back, and now it is 5% lower. One more thing which has made so SGB on a different tax regime is the long-term capital gains which has come on the debt side. So
Yes.
that has also made this product, I think, one of its unique of its kind, which does not account for capital gains compared to most of the financial instrument, or I may say all the financial instruments which are currently available uh, uh, in the market under and having that kind of a liquidity.
Yes, you're absolutely right, because the debt funds now have been made, equivalent to a fixed deposit or something, but still the government has given a preferential place for sovereign gold bonds, which is good.
Right.
I haven't gone into the, the smaller this thing, but I know, I mean, it's the same thing. You're getting an interest,
True.
and it is tax free and all that stuff. So it is definitely, what I would say, extremely useful instrument. And particularly for those who are new to gold, it is great. Even for those who want to buy, as I said, you want to buy it in future, but you don't want to hold the gold now, it's a good this thing. So there are lots of advantages about this instrument.
Yeah. In fact, I'll also like to tell our viewers, because they are into capital markets and they may compare gold ETF versus sovereign gold bond. So the two big reasons why sovereign gold bond still has an advantage. A is on the taxation, because if you buy in the primary issuance like now and you hold it till maturity, there is no capital gains. ETFs or a gold fund doesn't fetch you 2.5% kind of an interest. Probably there could be a little bit of, in fact, expense which is there with each of these. But unlike sovereign gold SGB or sovereign gold bond gives you a 2.5% kind of a cash flow coming to you. So that's the second advantage where it is far better. Probably the liquidity part is something which one has to look into if you're trying to time the market for a 1 month or 3 months or 6 months. In that scenario, an ETF can make some justice, but apart from that, in fact, we also don't recommend investing into gold for a period of 3 months, 6 months, unless you are pretty sure about the technical charts and all the gold movement. So invariably, sovereign gold bond makes a clear-cut advantage over rest of its peers as an asset class to hold on. So I can't see much questions, sir. So all those clients who have joined in the last, probably before we end up, there's a question box in the chat. You can write your questions. Anything else, sir, Som sir, which you want to talk about on the gold? I think it's like a no-brainer kind of a product. So
absolutely, it's always I like not having the questions, because that also says that it is an unquestionable investment, right?
Right.
So it is see, between ETF and sovereign gold bond, what all that you said is true. Different people have different requirements. All these instruments make sense for some people. Some people may want liquidity in 2 years, so they may not find this thing. But I just want to give one again. We don't forecast price as a World Gold Council. We never do that. But important thing to understand for people with that is you want to work with gold price in the last couple of years. From 2019, it has almost doubled. Not almost, it has doubled. Now rupee, if we believe, again, many people will be dealing with currencies. If you believe that anyway there is going to be a currency depreciation because India needs more exports, India needs growth, blah 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 blah, you are going to talk about at least a 4 to 4.5% kind of increase in price, purely because we need that kind of depreciation. Or maybe that calculation also can be done, which means 7-8 years from now, just like how a couple of years before, when they issued the tax-free NABARD and the NHB and all those bonds, they have turned out to be extremely useful. And as the tax rates also went up, they turned out to be one of the best instruments you have ever held. So like that, if you are able to see that you are not, you can keep the money, and you want the upside, I think it is gold is clearly seen what we are going to have a depreciating this thing, because we are a growing economy, whatever it is. You will see that you will get a good capital gain which is tax exempt.
Right, right. There are one or two questions which I'll quickly read out. One, so does holding gold is better than silver? You want to touch on that, because though both are different asset classes altogether, both though precious metal, but silver has more of an industrial use and not. Anything else?
Yeah, see, as an investment, we only talk about gold. We don't even say, whether you should hold other instruments. Like if somebody says, is gold better than crypto? It's for individuals to take that call, because there are risk is totally different within the two. In fact, we say if you hold crypto, you must hold more gold, because it's a risky asset. Neutralize the risk. So silver versus gold, I don't want to say it. Gold as such is definitely, what it is. So I would leave it like that.
Yeah, and there's no sovereign silver bond so far. So
Yes.
so
Yes.
I'll request the investor, if you're looking forward for gold, this is the best option. Second, there's a question on what is Series 1 and Series 2, and does the Series 1 has a better ROI compared to the Series 2? So anything on that? Though the Series 2 is announced, but that's the price is not announced, so it is immaterial. You want to touch that, sir?
No, I think Series 1 is what they intend to do. So this is Series 1, right? What they have come out with.
Right, yeah.
Yeah. So it's just I guess it's numbering. I haven't really looked at it. I therefore can't answer. I think probably one of your team members can answer the answer.
So I'll answer that. So whomsoever has asked this question, please understand. Look, for every series, there is a gold price which gets announced just a week prior, or not even a week prior. It comes on Friday. So it's totally dependent on what the current market situation is. We can't say that next series could be better price relatively, or what, because it's purely dependent on market dynamics and how the price is moving. But if you have funds, it's better to participate now, because the Series 2 will come pretty late. It's better to just jump in, because you are still you are entering a price which is 5% lower than the current or the peak. So that's it for you. There are questions on what is the best tenure for holding gold bonds. So I believe that's till the maturity.
The whole purpose of gold bond is to make you a long-term investor, and with gold it is always preferable. There is always room for traders, but for a normal investor in gold, you have to look long-term. Look at gold is actually intergenerational asset. That's why it's held by grandmothers and given as jewelry to the granddaughter, that kind of stuff. It is a long-term asset. Therefore, even in fact, 8 years, I would say, is not the kind of thing. Gold is just there. It's an insurance.
You can roll it over further. So there's one investor who wants to know that the gold has gone up because of COVID as a scenario, or in general there is an uptrend, and can we put some ROI or expected returns on that?
Good. I think it's a good question. If I may take 1 minute. For those who are interested, there is no way of valuing what is gold, because it's not like an equity of a company or whatever. You can say net worth, book value, PE, and all that stuff. How do you therefore value gold? We have helped, if the person who has asked probably is a very curious thinker, and we want to help such people. So go into our website, World Gold Council, and go into tools. There is something called Quorum. You can actually use that tool to play with factors that affect gold prices, which you think like global GDP, US interest rates, India demand, China demand. So it will give you an implied value of gold, and you can play around with it. We also have got scenarios which we have worked with. We have also made it very easy for those who want to just read what it is in that. So there is a tool called Quorum. You want to use that quorum, I think it will help some of you, and you could probably use it yourself, or use some of the things that we have got. I'm just showing you one slide here again. Just bear with me. Can you see the slide? Can we see the slide? Yes.
Yeah.
So we have worked with the Oxford University, and we have just put a few scenarios playing around with it. Mild global slowdown. You know, the various factors, we have just put it under this umbrella definition. We have said then what happens if there is a mild global slowdown. You know, US interest rates, GDP growth, India, China demand, everything. Housing crash, if it happens, what happens? Aggressive rates, what happens to gold? Supply crisis ends. So average 5-year analyze. You can do your own also. You can play around with this. The quorum is free to use. You can go into the website and take the implied. This doesn't mean this is the price. It just helps us to understand what should be the implied value of gold. So it gives you the demand supply equilibrium. On that basis, you can work out whether the price is reasonable or it will go up, come down. You can do your own analysis. So I think people who are statistically inclined will find this very, very helpful.
This is really, really great. So in fact, I was also not aware about this, and I will also do my own research out here. In fact, for in simpler terms, if I address this question, probably look, inflation is not going away and not very soon, and gold has been and always will be a hedge towards inflation. So something around 5-6% is what you can allocate to inflation, even in the long run, because in the short run it may move in various cycles, and plus you have a 2.5% kind of a rate which is flowing in, and then no tax benefit. So something around 8-9% is broadly where you can easily think about gold prices to be. And God forbid if there is any eventuality or something that makes gold more attractive. And please understand, gold has to be one of your asset class where it gives you a lot of cushion in the bad times. I do understand we have investors who are talking about peace of mind and stability of portfolio performance, where gold plays a vital role because it has an inverse correlation with the other asset classes. So that is something which one should also keep into picture, because we are not seeing this product into isolation. We are, as sir has rightly said, 5 to 15% should be the allocation to gold. Remaining, obviously, 80-85% you are participating into various asset classes which has its own cycle. And so that gold makes definitely a one basket one should not miss out. I think that's one thing which we want to address too. There is one question on gold bees, so that's the last question, which is your views on gold bees. I think gold bees as in are ETFs only, but that's only for again short term.
Sorry.
So gold bees, which is more of an ETF product, yeah.
Yes. So what's the question there?
So probably investing into gold bees versus SGB, which we already discussed. Yeah.
Yes, there are various ways. Definitely, each investor has to choose. It's not like if there is one ETF and every other product has to disappear. ETF addresses certain investors' requirement. Gold bees addresses certain requirements. All right, sovereign gold bond addresses. I mean, if you are able to definitely not worry about it for 8 years, one of the best investments. But if, as I said, if you want to do something within 3 years, maybe you will look at other forms. Physical gold, bars and coins, that's a very good investment. There is no doubt about it. But then you must have a use for it. All right, and jewelry is there obviously for when you have a wedding or something like that. So there are various ways you can invest in gold. Now there is even digital gold which has come in. There are various platforms like MMTC, PAMP, and Safe Gold and all that stuff, but they are not regulated, so one has to take that thing. But they are growing. So it all depends on what one wants to invest. I think it has a role. As far as India is concerned, I would only say that ETF still has a long way. I mean, it's one of a very good product, very liquid, but it still requires a lot of incentives.
Right. So To all our investors, just to reconfirm what is there currently in the offering, this is sovereign gold bond, which is series 1. As I said, series 1, the issuance has started on 12th of June till 23rd of June. This is available with HDFC Securities at 4 o'clock. So issue price is 5876 per gram. It is for individuals, and individual can maximum buy up to 400 kgs, sorry, 4 kgs, so 4,000 grams. So it's a lot of scope in the entire financial year. You can split obviously between 1 or 2 series, that's as per your liquidity. And so the best time is to buy now, because we don't know about future, so let's not predict it. So the sooner you jump into the water, you'll start swimming. So that's how it is. And a big thanks, Som sir, for giving us your time. I know your time is very precious. You are in tight schedule. Before this meeting also, you were into some other conference, and we have requested you to take out time for us. And it has been very insightful for all our clients. And it was pleasure talking to you, sir.
Thank you very much. And for those who need any more information, you always go into our Gold Hub. A lot of our research people put quite a lot of useful material, which some of you might find it useful. And there is one specific report we have recently issued, Strategic Case for Gold in India. It's got a lot of India-related figures as well. You might find that useful. And as I said, for those statistically inclined and who want to use tools and to find out the intrinsic value of gold, just try and use Codem. I must say I'm not an expert in this, but I have seen how the people who have worked on it have put it out. I think it's a very, very interesting tool to understand how to value gold. Given all that we talk about, when we talk about gold, we talk about many things. And put all those things, give a numerical value, and then see what gold should be. It gives you a very good indication. So thank you very much. I enjoyed it. I always enjoy talking about these instruments. So good luck to all of you.
Thank you, sir, and thank you all the investors for dropping in. And I still got a question: will those slides will be shared? So, dear investor, please note, we'll share you the note which is prepared by HDFC research team. If you are referring to the note which sir is talking about, you have to go to World Gold Council website and find out more material on that. So thanks a ton everyone for sparing time and coming in. Thank you.
Thank you.